Then we're looking at ES. Long time waiting here. Okay. Consolidation within this opposing 15-minute gap. Went long. Tried to get long here in the inverse volume imbalance off of the failure swing. Small little stop right here. Optimal time of day, which was what? 9:50 to 10:10 macro. Expansion. Got long. Now, initially we were aiming for premium arrays, but we don't need it to trade the whole way up here. Okay. I'm just reaching for 10 handles. That's it. Notice the volume imbalance here. If you extend that through, see the body closures right in the middle of that, and then sends us higher. So NASDAQ just reached 1800 as we wanted. So I believe we just missed it by a quarter point. Okay, guys, there's full take profit. Executions, only one trade. Okay. Just another transaction. Really nothing to get excited about here. Just in one more transaction. Just so happened to be a winning transaction. And we'll continue to execute on our plan every single day and run this account up right in front of you. And along the way, of course, yes, we're going to take losses. But the important part is the wins are so much bigger than the losses. So you couple that with consistency, and all of us will be on our way here. I promise. If you just follow me step by step. All right, guys. So you saw my executions with the members today on my live stream. Now I'm going to sit down here and do a quick, straight to the point review, starting right here on the hourly time frame. We see that we had this 8:30 run up. Okay, there was an 8:30 news release and sent us higher to do what? Well, we came up and swept that all-time high. You can see that on ES1. You can look at that at your own chart. But coming into the day, post this news release, we see that we dropped down into a discount. Discount what? See this for value gap here? Drop down into that. And we take our fib from the midnight low that was formed to the high. See our deep discount, 79% retracement level. Go to the 15-minute time frame. Now, not only do we have a discount key level being traded to, but we also have all internal sell side liquidity being swept here. So you see like this trend line sensation taking place here. A little too clean there, stacking up sell stops there, and what's going to happen? Well, they see this rally up with the 8:30 news release, and everyone's going to want to naturally chase that and keep getting long. That's the whole point of the Judas swing, right? And then what do? We trade off, take out all those with their sell stops resting below here. So sell side liquidity taken out of the marketplace, and now we're looking to see if we can't accumulate those sell stops to distribute them higher towards this premium array here. And what was that? Let's go back to the hour time frame. I forgot to mention this green line. This simply is just delineating the midpoint of this large wick left behind. So wicks in the algorithm's mind is seen as a gap, and we like to reprice into those. The midpoint, the 25%, and the upper 75%. Okay. Down to the 5-minute time frame. After we treat these key levels, we see that we make a swing low here, swing low to the right, and a higher swing low to the left. So what do we have now? A fractal 5-minute intermittent term low. Following that, we have expansion higher above what? This down close candle. So we now have a change in the state of delivery. As soon as we trade above this opening, that's a change in the state of delivery. Referencing NASDAQ, you can see we pretty much did the same thing, except NASDAQ had a lot cleaner delivery, much more speed and magnitude, and you definitely would rather be trading NASDAQ today, but it just so happened I was on board with ES today, right? So hopping down to the 1-minute time frame, we're referencing this 8:30 opening, so you can see that we're below that. And what do we do below 8:30 openings? We accumulate long positions. And then we also have this 9:30 opening here where we recalibrate. So off this intermittent term low here with the expansion, I got long right here at the volume imbalance. And you also kind of got long at this fair value gap here as well. But we have a market structure shift, return back into this imbalance, and this 1-minute order block here. You see that? It's an order block because it originated from this volume imbalance. It sent us above this swing high. and it created this imbalance, okay? Notice one thing here. What's this? This is a fractal optimal trade entry. So we trade down to the 62% retracement level, doing what? Taking out short-term sell stops. So one small little stop rate right there. That is all that is needed to send us higher to these premium rates up here. And we trade to what? This 1 minute order block right here. But what else specifically is this? This will be our 9:30 opening. So we came back and touched the 9:30 opening, but it also just happens to be a 1 minute order block. So that's a key level. You see that we closed above it, not even at it, we closed above it. That's a key signature we look for. And off of this expansion leg, we get long. And see how the closures and the wicks bodies surrounding this opposing 5 minute fair value gap. This is why we use gaps inversely, because we like to see certain things play out in terms of closures, wicks, bodies, all within the midpoint, the low, and the high. So this is everything I used for my trade today. Obviously, this is not the preferred delivery. We would have rather been on NASDAQ here, but we still got our money and we continue on and can't wait for next week. Thanks for watching.